Hi everyone, my name is Wasim Syed, and in this channel we evaluate different companies and calculate their intrinsic value, and we check if it's a good idea to buy them or not. First of all, a disclaimer: I'm not your financial advisor. It's just a suggestion. We calculate the value, and try to share with our viewers. So today we will be evaluating a very hot stock, Meta. And before I get into the evaluation of this stock, I would ask you to subscribe to this channel because we will be posting the evaluation of different companies, different hot stocks every week. Moreover, if you subscribe and share it with your friends, then we will be sharing a list in which even if you miss any video, we will update the stock here, and this is updated every week. And then we add a price of a stock plus check if it has a moat or not, and so on. So I would ask you to first subscribe this channel. For the evaluation of this stock, we will be using the principles from the book Rule Number One by Felltown, and also some principles from Felltown. Sorry, also the principles from Benjamin Graham and his book The Intelligent Investor. So before evaluating, we need to check if this company is a wonderful company, and for that we need to check five big numbers. The first number is ROIC, return on investment capital. We will not be going into the details of these numbers. We will be posting other videos. For now, we are just evaluating. The definition of these numbers will be told to you guys later in the later videos. So ROIC, for that, we will go to website finance chart. I will be putting all the links in the description. So there you will go in finance chart, and then you will search for Meta. And then you will select 10 years. So we need to see if the ROIC of that stock is more than 10% on average for the last 10 years or not. And you could see that the ROIC is 31.2%, which is way above the 10% limit. So the first big number is checked. Now we'll go to the second big number, which is revenue growth. We need to see if the revenue growth of that company is more than 10% or not in the on average in the last 10 years. So for that, you'll go to msn.com, and as it is an open source, we don't have the data for last 10 years, but we'll check for last 7 years. I think this is also really good to give an idea, but it's better to have for the 10 years, but 7 years also work. So then we'll search for Meta on msn.com, and then we will go to analysis. And once we are on analysis, then we will go to income statement, and then the first number we'll see. So we can see in 2016, the revenue was 27.64 billion, and in 2023, it is 134.9. Now we will see if we have the growth of 10% or not. And for that, we'll go to the calculator of rule number one. I will be sharing all these links, so don't worry. And for that, we will go to investment calculators, and we will scroll down, and then we will go to sales growth rate. And we remember the initial number of sales growth rates or the revenue growth rate was 27.64 billion, and then the current sales was in 2023 was 130.9, and it was the 7 years. So we can see it's 25%. So the growth was around 25% on average for the last 7 years. So it is for sure greater than 10%. So the second box is also checked. Now we'll go to the third big number. It's called EPS, earning per share growth rate. And earning per share growth rate will be in the same statement, income statement. And if you scroll down, we can see this diluted EPS growth, the earning per share. And we could see in 2016, it was 3.49. And in 2023, it was 15, around 15. And now we'll calculate its growth rate. And for that, we will use the same website and scroll down, and we'll go to the EPS growth rate. Here it is. So we are checking for last 7 years. The initial EPS in 2016 was 3.49, and then in 2023 it was 15.09. So it's 23%. So for sure it's greater than 10%. So the third box is also checked. Now we will go to one of the most important number. It's equity growth rate, and for that we will go to balance sheet. So instead of income statement, we will go to balance sheet, and we see it's 59.19 in 2016, and it's 153.17 in 2023. So we will go to same website, this rule number 1 website, and we will go to investment calculator, scroll down, and then equity growth rate. And then equity growth rate, we are checking for last 7 years, and we saw that in 2016, equity was 59.19 billion, and in 2023 it's 153.17 billion. So it is also greater than 10%, we can see. So the fourth box is also checked. Now the last number we'll see, which is the free cash flow growth rate. And for that, we will go to cash flow here on MSN Money. And we could see this number, last number, free cash flow. And we see that free cash flow was in 2016 was 11.62 billion, and 2023 it was 43.85. So we'll go to the same website, rule number 1. Same thing again, free cash flow. So it was 7 years, and it was 11.62, and then it was 43.85 in 7 years. Sorry, I messed it up and was checking the wrong number. This was not the free cash flow. Just a moment. So it's a growth number. We can also just use the same growth calculator for EPS because it's a growth, it's the same thing. So free cash flow, it was 2016. In 2016, it was 11.62, and then it was 43.85 in 7 years. So just to clarify that it's a growth calculator. You can use any calculator for calculating the growth, whether it's EPS, you can calculate the growth rate of equity on EPS calculator because it's just a growth calculator. So we can use it for free cash flow as well, the EPS calculator. So we have 21% in the last 7 years. So free cash flow is also growing at a rate of more than 10%. So all the 5 boxes are checked. That means it has a moat. It is a wonderful company. Moat is like a competitive advantage. So it's a wonderful company. Now we need to see whether this company undervalue or overvalue? Should we buy it or should we not buy it? Because being a wonderful company is one thing and being undervalued is another thing. So we need to check its intrinsic value if we should buy it or not. So for that, we will go to sticker price, margin of safety. So, and for that, we need current EPS, and that we can find on MSN Money and the summary. And the EPS, current EPS, TTM 12, last 12 months, for last 12 months is 17.59. So we will go here, we will put 17.59. Now future growth rate. For future growth rate, the book's rule number 1 suggests we take either the prediction of analyst or the equity growth rate and compare these two and see which number is less. So we have to be conservative so we don't lose our money. So we take the lesser number. We remember the equity rate was 15. Now we will go to zacks.com to check what the analysts are saying about this company. So we will go to zacks.com, enter Meta, then we will have these tables, and you could see that the expected growth rate for next 3 to 5 years is 19, which is more than the equity growth rate. So we have to be conservative and we will take future growth as 15 and not 19. And now future PE. What is the future PE ratio? And for that, we either take the twice of equity, which is 15, or what analysts are saying, which is 26, or we check the last 7 to 8 years PE on average. So, and for that, we will go to analysis, make it annual on MSN Money, and then valuation, and this is price to earning ratio. And we add all of them and then divide it by the number of years, and then you'll get the average PE. What was the average PE for last 7 to 8 years? And I have already calculated, and it was 24.95. And now we compare all these three numbers, and 24.95 is the lowest number. So we have to be conservative and we take that number, which is 24.95. And what is now it depends upon you, what you want the return on your investment. So the book suggests we should take 15%, but it's up to you, whatever you can take. So I'm just leaving it as 15%. And with all these calculations, it turns out that the sticker price, the intrinsic price, is $439, and the margin of safety, because we don't buy it at the intrinsic, but we have to be more conservative and divide it by 2, and then we get $219. And the current price of Meta is 539, so around 540. So it's way overpriced right now, and we can just lock this number or put an alarm in our trading websites or trading app that when the Meta is lower than this price or near to this price, only then you'll buy, because right now, according to the value investment, it is overpriced. So that is all from my side. I would ask you or request you guys again to subscribe. We will be posting evaluation of very hot shares every week, and also you will be updating this sheet I mentioned about. So please be updated, and thanks a lot, and see you next time.